If I told you this video can save you $10,000 on your mortgage, would you listen? Is 10 dimes important enough to pay attention to Matt the Mortgage Guy for 8 minutes? In this video, I'm going to talk about the pros and cons of using a mortgage broker versus a bank. I'm going to get into different loan programs and which ones are different in different places. And surprise, surprise, even as a mortgage broker, I'm going to tell you, if you stick around to the very end, some places where you might want to use your bank instead of a mortgage broker. Stay tuned. All right, Matt Gouget, residential mortgage broker, licensed across the country. If you want to connect me and my team, go to greatmortgagebroker.com, fill out the form. We're happy to help. If you're looking to connect with an agent anywhere across the U.S., homeandmoney.com/Matt. In this video, I'm going to tell you the pros, the cons, the good, the bad, the ugly of working with a bank, working with a direct lender, and working with a broker. And as a broker, you may think that I'm biased. I'm just going to tell you, you've always got to call a mortgage broker first. The mortgage broker is the only place to go. It's just not the case, right? So I'm going to give it to you in simple terms. I'm going to even back it up with some data, right? And let's get started. If you're buying in 2023 or beyond, it might depend on what type of loan you're going to get and what kind of financial situation you're in on where you should be shopping for a mortgage, where you should be doing your business. If you're getting an FHA loan or a VA loan, these are government loans. And I can tell you, and it's just not my opinion, there's data to follow it, a mortgage broker is going to be able to get you the very best deal on these types of loans, just like they can with a conventional loan. And if you don't believe me, Google for yourself $9,400 in savings working with a mortgage broker. You're going to be able to find, and there's been studies on this, it's actual data, it's HMDA data taken from 20 million plus mortgages written in the last 24 to 36 months, that on average, working with a mortgage broker is going to save you $9,400 a month. I showed you the $10,000 because on average, if you're a minority, you're going to save $10,700. That's what the data showed. So let's just round it to $10,000 and call it $10,000 you're going to save working with a mortgage broker. I told you I'm not just going to be sunshine and rainbows and always work with a mortgage broker. If you're the person who's putting 20% down on a jumbo, you're a Chase private client, you've been banking with Wells Fargo for 2 decades and you've got 2.7 million in different accounts with them, chances are they're going to offer you a 30-year fixed rate jumbo or a 7-year ARM with a really incredible rate. They're going to write that loan at a loss because they want your mortgage business to sit alongside your brokerage account, to sit alongside your, fancy checking and savings account that they have that they give special names to, like Chase private client. I'm fine with that, right? That is going to be likely where you get your best deal if you're doing a jumbo loan. If you're putting 10% down on a jumbo loan, or if you've got a unique scenario where maybe it's a first that's conventional, a second loan, and then a 10% down, like 2-1-2 combo type of loan that you're using to buy something that might land in the jumbo space, then you're better off with a broker, right? I want to give credit where credit is due because I have a lot of direct lender friends that I work with. And so I don't want to throw them under the bus. Like, there's a bunch of great ones out there. There might be programs that are specific to them, their region or their company, whether it's a down payment assistance program or something similar, where they might be the best bet, right? And I think that this is a good point in my video to really stress there's great loan officers and there's terrible loan officers across all channels. Banks, credit unions, direct lenders, brokers. You always want to work with a high quality professional who's able to give you high level advice, because even if you're working with a lender who's in the broker channel that can offer significant discounts, if they don't know what they're doing and they're doing an improper job structuring the loan, they're going to miss something. Oh, I didn't realize that, based on your scenario and how long you're going to keep it, it would have been better to structure this with no points or with a point or with a 2-1 buy down or something else of that nature, right? So high quality mortgage advisor good way, like the starting point, right? And then based on different loan scenarios, you might seek a specific loan originator in a specific channel, obviously biased to broker, right? And if you're doing something like a non-QM loan or, bank statement, DSCR, these types of things, you really want to talk to a broker, because as a broker, I'm able to look at Angel Oak, I'm able to look at Home Express, I'm able to look at Remen and really find out based on your scenario, your credit score, your down payment, what type of loan you're trying to structure, what truly is the best loan for you and the best lender for your loan. Because what some people might not know is the experience isn't the same at every single lender, right? If you're self-employed, if you've got, some non-perfect credit, if you've got something sticky about how you get paid, and it's going to be a gray area on whether they're going to give you the overtime income or not. These are the type of things that brokers who work with multiple lenders are going to be able to take your situation and scenario and say, not only is it going to be a better experience and more likely to get to the finish line at this lender, but yes, you're going to get the best price. Yes, you're going to get the best terms. And so that's the ability of a broker to really have the optionality of where they're going to send your loans. Unfortunately, for some lenders, if they're captive, if you're a Bank of America loan officer, you've only got Bank of America. If you're another captive, direct lender who only has your lender's products, then you're captive to that, whether or not your company prices aggressive on FHA or not, right? In the broker space, you're an FHA buyer, you're putting 3.5% down. Every dollar counts, right? I'm going to send your loan to a lender that's going to give you the very best price. Like I showed, $9,400 on average is what you're going to save. Whether that means less closing costs or whether that means a half a point in rate, that's significant amount of money. That's, the numbers don't lie. The millions and millions of closed loan data has shown that it's going to be cheaper. So hopefully this was helpful. It's not coming off, as a hit piece, because I really don't intend it to be. I've got friends across all different channels, but some of you might wonder, and I get this question quite a bit, like, why is one lender cheaper than the next? Why is a mortgage broker $9,400 cheaper? Where the fastest and easiest way to explain it is on the wholesale lending side, in the broker channel. Your loan is being brokered to the wholesale lender who operates on really thin margins, and there's no middleman, right? If you've got a big retail operation that has a lot more margin built in to pay a regional director, to pay a director of sales, a branch manager, an account executive, and all these people up the chain, they might have 500 basis points in margin built in to your FHA loan. Whereas a broker, it might be 225 basis points, right? So that 275 basis point spread between the two is going to equate to the end consumer saving $9,400. Hopefully this is helpful. Again, if you want to reach out to me and my team, we're more than happy to help. Go to greatmortgagebroker.com, fill out the form, let us know where you're at and how we can help, and we'll be in touch. Talk to you soon. Bye-bye.